3 services you may choose while home buying. In this tutorial, we're discussing the 3 major services or coverage nearly all home buyers will need to choose when buying a home. They are a homeowner's insurance policy, a home warranty plan, and a moving service. Homeowner's insurance. If you're getting a mortgage to buy your home, the lender will require that you take out a homeowner's insurance policy that will cover you if thunder strikes your home, a guest trips on your stairs, valuables are stolen by a burglar, and for other mishaps. To get an accurate quote, your insurance agent will usually need the following 5 bits of information. 1. The coverage and limits you want. You'll need to know an estimate of the replacement cost of your home and its contents, as well as a visual inventory of your valuables. Remember, your home is insured not for its market value, but the cost of rebuilding it from ground up. 2. Description and square footage of your home. The appraisal from your lender has this information and can be forwarded to your agent. 3. Loss history. Your agent will look into any past claims or defaults. 4. Fire and security devices. 5. Distance from the nearest fire department and hydrant. Once the above information is available to your agent, you can usually get a fairly accurate insurance premium quote. When considering insurance rate quotes, pay attention to 3 things especially. 1. Insurer strength ratings. If one day your insurance company is declared insolvent, you will have a serious problem. In addition to losing your premium dollars, you'll be forced to buy replacement coverage from other carriers, often at higher rates. You can check, for example, with Weiss Ratings, a nationally recognized source. 2. The amount of the deductible. A low deductible may seem attractive, but may not be the best thing for you. If your deductible is $1,000, for example, it means when you make a claim, the first $1,000 has to come out of your pocket. The higher your deductible, the lower your annual premium. Choose the highest deductible you can safely afford. Taking a $1,000 deductible rather than a $500 one can reduce your premiums by as much as 25%. And remember, the insurance premium is something you'll be writing checks for month after month, year after year, as long as you own the home. 3. An annual policy review. Let's look at the specific steps involved in choosing and securing your homeowner's insurance coverage. Step 1. You must understand that a standard policy covers property damage caused by certain disasters, personal belongings up to a limit, personal liability, which protects family members from lawsuits related to injury or property damage they may cause others, and medical coverage, which pays the expenses of non-family members injured on your property. Step 2. Calculate how much insurance you need to carry. Homeowner's insurance reimburses you for the cost per square foot of rebuilding your home, not the market value of the house. Step 3. Figure out how much it would take to replace the contents of your home, which you can record by photographing or videotaping them. Consider hiring a professional appraiser to help. You may want to obtain appraisals of special valuables such as antiques, jewelry, stamps, coins, and other collections. A standard policy has reimbursement limits. If you own something particularly valuable that exceeds the limit, buy a separate policy for it. You'll have to prove its worth with an appraisal. Step 4. Consider buying additional coverage. Damage from fire and lightning is covered in standard policies, but flooding and earthquakes are not. Hurricanes are generally covered, but any flooding they cause is not. If you live in an area prone to disasters that cause rebuilding costs to skyrocket, you might want extended replacement coverage, which gives you an additional 20 to 25% for your policy limit. Step 5. Weigh the pros and cons of the cash value policy, which gives you money to replace your belongings, minus depreciation, versus a replacement cost policy, which reimburses you for the current cost of replacing your goods. The latter has higher premiums. Step 6. Get at least 2 or 3 rate quotes, since premiums can vary wildly. And as mentioned earlier, check out the financial health of various insurance policies by searching online for their financial strength ratings. Step 7. Ask about discounts. Ask if you qualify for a premium discount if you have a security system, an updated electrical system, or new plumbing. Some companies also offer discounts for installing fire extinguishers. Here are some other discounts. Several companies offer reduced rates to members of qualified groups, organizations, and trade or business associations. Members of credit unions and employees of certain businesses may also be eligible for group insurance rates. If you are a member of one of these types of groups, ask your agent if you qualify for group home insurance. Veterans of the Armed Forces are one example of such a group. Age of dwelling or new home discounts. Many companies have a discount program based on the age of the home, starting with new until the home is 10 to 20 years old, depending on the company. Credit scoring discount. This discount is often the largest discount available to policyholders, and it is based on the credit history of the primary policyholder. Companies use various names for this discount, including Blue Ribbon Discount, Advantage Credit, Budget-Wise Discount, Prime Discount, Insurance Score, as well as other names. If you have a good financial credit rating, don't pass this up. Senior Citizens Discounts. Many companies offer a discount on home insurance to senior citizens over 55 years of age. If you qualify, check with your agent. Multi-policy discounts. If you own a car, always check homeowner rates with your car insurer. Some companies give discounts to customers with multiple policies. Step 8. Review your policy regularly after you get it, and alert your insurer anytime you make substantial renovations or a pricey purchase. Did you know if a ring or other piece of jewelry falls down the drain, standard homeowners insurance partially covers the replacement costs? When it comes time to renew your policy, you may receive a discount if you stay with the same company for a number of years, depending on how many claims you may have filed during that time. Each company that offers this discount may use different criteria. Terry is a first-time home buyer and is shopping for insurance coverage. Take a look at how his quote looks on a 3-bedroom, 9-month-old property. His standard base rate is $1,510 a year. He receives a 2% discount for having a smoke detector, another 2% discount for having a deadbolt lock, and yet another 2% for his fire extinguisher. When his insurance agent discovered the home was just 6 months old, he applied a 20% new home discount. Terry switched over the policy for his 2009 Chevy Malibu, which saved him 17% as well as his life insurance. These two discounts under multi-policy saved him 22% combined. Lastly, because of Terry's outstanding credit standing, his agent was able to deduct another 6% for insurance score, leaving a final annual premium of $694. Not all carriers offer all the discounts you've seen in this example, but it doesn't hurt to ask. Now that we've looked at homeowners insurance, let's discuss home warranty plans. Home warranty plan. Many people confuse home warranties with homeowners insurance. The difference is pretty simple. Homeowners insurance protects the homeowner against loss due to theft, natural disaster, or accidents on the property such as fire. Home warranties deal with losses due to natural wear and tear or use of necessary appliances and systems in the home. Home warranties cover items such as heating and cooling systems, electrical, plumbing, refrigerators, and anything else for which repair and maintenance may be required. The home warranty market is very competitive. Choosing the best company for this type of coverage can be difficult and requires research and a thorough examination of the coverage offered. Be aware that protection plans typically don't cover certain conditions, such as pre-existing conditions, repair needs due to lack of maintenance, care, and so forth, unless they charge an additional fee. Such conditions are generally mentioned in the small print in the contract, so it's easy to miss. Here are some of the factors you will want to consider when shopping for the best company and coverage for your home. Amount of coverage. You can make the choice of how much of your home and appliances you want covered by a home warranty. Some people are only concerned with the kitchen or the appliances in their basement. Still others want to have the peace of mind knowing that anything in their home that can break down or malfunction is covered by the policy. Only you can determine how much coverage will make you comfortable and fit within your budget. More coverage obviously costs more. Comparison shopping may help you prioritize the items or systems to be covered according to price. Replacement versus repair. Home warranty policies vary when it comes to determining which covered items should be repaired or replaced. Take a hard look at the company's criteria for both. You will want to know whether or not replacement of a unit will be for a similar one, or will it be determined by a price point. The ideal policy offers a replacement for a like item of equal value. Customer service. It is likely that contact with your home warranty company will be during an emergency situation. You will want to know the hours of operation for the customer service department, as well as any credentials representatives are required to obtain. The performance of customer service should be an important factor in making the choice between home warranty companies. Professional service providers. Home warranty companies usually have an approved list of service providers they routinely engage. You should obtain a list of the relevant service providers in your area in order to evaluate the type of contractors you will be required to deal with. All contractors should be licensed and accredited in their applicable fields. When looking at the home warranties list, you should be able to perform some research on the contractors and ask, are these people I would want to allow in my home and trust to efficiently get the work done? Home warranty companies are not glamorous, and many don't advertise. Your best course of action is to get a recommendation from your real estate agent and compare with a few choices on the internet. Be ready to put some hours into securing the best possible coverage for your home at the right price. A basic policy costs somewhere between $300 and $500 a year and covers plumbing, electrical work, HVAC systems, and most major appliances. Washers and dryers may be excluded. Items like spas and swimming pools can cost extra. A good number of sellers will pay for your home warranty, something your real estate agent can request on the purchase offer. It's a great idea, giving you peace of mind, seeing that the plan lasts for a year after closing and can sometimes be extended for a fee. Finally, let's look at moving services. One of the biggest headaches and causes of stress in the home buying process doesn't even begin until you've closed the settlement process and been given your keys. If the stress of searching for a home and landing a home loan wasn't bad enough, now you've got to pack and move. The majority of home buyers use moving companies, and you may want to consider them too. Your movers should be 1. Reputable, 2. Licensed, and 3. Affordable. 1. Firstly, make sure you're dealing with a reputable company and not rogue movers. How do you avoid moving scams? Horror stories about sketchy moving companies abound. Things gone missing, broken, or shattered. And worse, movers take advantage of homeowners. A common scam begins with the moving company initially claiming they will charge you based on the weight of your belongings in their truck after they've loaded it. In other words, the initial quote would be a per-pound charge. Then, once they've loaded and locked your stuff in the truck, they change their tune, saying you'll be charged by cubic foot. What usually happens next is for the rogue moving company to allege your belongings are much more than what the inventory indicated and you're double your price. But it gets worse. The moving company literally holds your items hostage until and unless you pay up. Often, when a homebuyer thinks they're dealing with a mover, they're really dealing with an online broker who takes the order and farms the job out to a set of movers for commission. If something were to go wrong, whom would you hold accountable? 2. Let's discuss licensing. The company should have a license from the FMCSA, the Federal Motor Carrier Safety Administration. You may also want to check with the local Better Business Bureau and American Moving and Storage Association whether the company has any complaints or other issues. A smart thing to do is to go and personally visit their office and warehouse before you agree to anything. This alone will tell you a lot about the company and their business. Does the company have a website? Do they have a landline telephone number? And is it professionally answered stating the specific company's name? A vague generic greeting such as movers or moving company could be a telltale sign. Insurance is another important consideration. Don't be afraid to ask about their insurance coverage and look at a copy of their policy. 3. Affordable doesn't mean cheapest. By picking the cheapest quote, you might be sacrificing other more important aspects of your move. Homebuyers should know that movers are required by law to deliver your goods for no more than 10% above a non-binding estimate. It's best to begin price shopping just as soon as you know when you're going to close, and at least 30 days before your move date. Beware of lowball quotes that seem too good to be true. When considering estimates, keep in mind that on-site estimates are a lot smarter than getting a verbal or emailed quote without the moving company even viewing your inventory. Finally, don't give up upfront money for a so-called deposit before moving day, and never ever pay with cash. Keeping a documentable paper trail will be critical if you ever have to confront the moving company. Thank you for watching, and be sure to contact the featured real estate professional who provided you with this informative video tutorial.